All right, let's talk tariffs. And so with tariffs and all of the uncertainty surrounding Liberation Day, which is today, April 2nd, the filming of this video, and what it means to you and your personal financial planning. And so I wanted to make a video for you guys just to break down, what to look out for and what to expect. And so one thing to note with tariffs, so President Trump is imposing a 25% tariffs on all kinds of different goods, including auto manufactured parts, which is gonna have a big ripple effect, potential big ripple effect across our economy. And so with the stock market, with the equities market, or you hear about the stock market and the S&P 500, and our economy, anytime there's a high level of uncertainty, and meaning, what does that mean? Uncertainty, Scott. What that means is that businesses don't quite know what the environment around the corner is gonna be, okay? And anytime that happens, they're gonna pull back on their investing, preserve cash so that they can make good on their debt payments and manage their business. And so inevitably that is going to create a reduction in stock prices. And we've seen this many times in the past. This is nothing new. This is part of the stock market and how it operates. We go through the 4 different cycles of our economic system. We go through expansion, which is we have growth. We go through contraction, which is a reduction. We go through a trough, which is the bottom after a contraction. And we go through a peak, which is at the top after our expansion. And so what we've been in the last 10 years has been in this tremendous expansionary environment. Now, we did have a very rough year a couple of years ago in 2022, but this is a little bit different in terms of these tariffs and against the backdrop of in February, we also had unexpected increase in inflation. And so those two things combined have caused our Federal Reserve to withhold the potential for the lowering of interest rates. And that is what has been baked into the market. And so all of a sudden there's this shock, there's this uncertainty. Oh no, we might not have any rate decreases this year, maybe 2. And so that is what is expected currently. And so it's pushed everything back. And so when that happens, of course, we're gonna see a bit of a loss in stock market values. Now, currently, as of today, the market is actually responding very, very well to Liberation Day. But also, year to date, the S&P 500 is down about 3.3%. Not a big deal, nothing to be afraid of, but there's a lot of uncertainty out there and people are selling out of their stock positions, thinking that they're trying to time the market and they're trying to get ahead of a potential recession. And there's all this talk about a recession coming around the corner. Recessions are nothing new. What they mean is the official definition of a recession are 2 consecutive quarters of negative GDP growth, or our gross domestic product, which is a measure of our economic output here in the United States. And so it's something to look out for. But this is the value of having a good financial planner in your corner helping you navigate these uncertain times. And there's certainly a lot of uncertainty out there. And so if rates don't decrease and we all of a sudden see an impact in inflation, now why would we see an impact in inflation? Well, all that tariffs are ultimately gonna do is raise prices on manufacturers and producers of goods and services and their cost on them. They will then in turn inevitably push that cost on down to the consumer, us, the taxpayer. Everything around us is gonna go up in price, and that is gonna have a major impact on our take-home pay and our spending and our financial outlook. And so that's why it's very important to have a financial plan. This is the time that it's important not to have a bunch of big consumer debts, credit cards, car loans, student loans, personal loans, home equity loans. It's best to reduce those or not have them at all, so that when we inevitably go through that recession, we're gonna come out on the other side a lot better off than if we do have all of those debt payments that we ultimately end up having to make. I just did a video earlier this year on Chime, MyPay, and the Buy Now, Pay Later apps. These really contribute to this issue, and so please avoid those if you can. And so these are the times when it's good to not have that stuff going on. And so having a good financial planner to guide you through this is what we want. And a lot of times in my videos, I talk about using the stock market as a long-term investment. And so the question might be is, Scott, how bad can things really get? Well, The most recent example I can think of is what's considered the lost decade. And what does that mean? Well, from January of 2000 to the end of 2009, so that 10-year period, that decade, we essentially saw nearly no growth at all, including dividends, in the stock market. We went 10 years, got nothing out, okay? Now, the 10 years after that was phenomenal growth. From 2010 to 2020, made up for that, tremendous amount of growth. And so lots of investors missed out on that because of what happened the previous decade. And so anytime I talk about long term, I'm thinking 10, 15, 20 years into the future. This is our retirement accounts. These are investments that we don't need to use for a long, long period of time. And so this is part of the planning process that I do in a financial plan, which is if we're not going to use these assets and we want tremendous amounts of growth opportunity long term, let's use the stock market. If we do need the money though, in a short period of time, not long term, then using the stock market has a lot of risk to it, and so we can't control the ups and downs and where we are in the economic cycle. And so I hope that this helps. In the end, tariffs are going to have an impact on us. They could create a rise in the cost of goods and services. If that really starts to impact our economy, we could start to see businesses slow down and start to conserve costs, cut costs. We could see job losses. It's going to affect our housing market and all of the above, and with interest rates too, if interest rates go up. And so there's just a lot of moving parts here, and so there's just a lot to think about regarding your stuff. Now, if you're in stocks, your best move is to essentially do nothing. Don't sell at this time. Certainly if we start to see more and more losses, there have been many studies, just absolutely proven, empirically proven, that attempting to time the market from the everyday investor is proven to be a very bad idea. Your best bet is to stick with your plans, stay in it long term, and you will come out on the other side just fine and reach your goals and objectives. Again, thank you for tuning in. This is Scott Schiller, Certified Financial Planner, CFP, reacting to all of the tariff changes here on Liberation Day. Stay awesome, stay healthy, and I'll see you in the next video.